Hi, today we're going to have a look at the 2016 Leaving Cert Higher Level Published Accounts question. Published accounts are for PLCs, which are public limited companies, and are similar enough to the question ones, except the format of the trading profit and loss and balance sheet are slightly different. As with all published accounts, we are given a trial balance, then we are given some additional notes, and we're asked to prepare the profit and loss account and balance sheet in accordance with the Companies Acts, showing the following notes. So there's 5 notes there we have to show along with the accounts. And then part B is a small bit of theory which we'll deal with at the end. So the first thing we're going to do is have a look at the trading profit and loss account. So the published account, the format is slightly different. It has to look like this. It's not the same as question 1, so the format needs to be learned off. The first thing we have in the profit and loss account is turnover, which is just another name for sales. So the turnover we can see from the trial balance, there's no change to turnover in the notes. So the turnover figure we're taking from the trial balance, and it is 1,799,700. Cost of sales, we need to do a working on cost of sales. The cost of sales isn't on the face of the profit and loss account. You need to do a note for it and then just put the total into the profit and loss account. So my first note is going to be on cost of sales. Now we can see from the question, it tells us that note 2 down below here says that the patents were acquired on the 1st of the 1st 2011 for 77,000. These patents have been written off or amortized over 7 years in equal installments, and the amortization is to be included in cost of sales. So this has to go in cost of sales along with our usual cost of sales items. So if the patents were acquired for 77,000 and they're written off over 7 years, that's 11,000 a year. So to look at the workings for this, again, we have our usual cost of sales note. When we're working out our cost of sales, we always start off with our opening stock. And our opening stock we will get from the trial balance, and opening stock in this question is 91,000. Then I'm going to add my purchases, which again are coming from the trial balance. The purchases are 11,650,000, but the patents written off or amortized also have to go in here. So the 11,000 also has to go there. And they come to 1,267,000, and then I just have to take my closing stock, which I get in note 1 of the accounts, is 76,000. So that comes to 1,191,000, and that is my total cost of sales figure, which will now go into my accounts. So I'll link those, and that's 1,191,000. So my turnover less my cost of sales gives me my gross profit. Now I have to take away my distribution costs and my administration costs. So again, I have to do a note for both of these. So first of all, I'm going to do my distribution costs. Now the distribution costs from the trial balance, I can see, are 121,000. Depreciation of vehicles also has to go in here, as vehicles are to do with distributing the product. So I can see from the question, if I look at the question, I'll find out about my depreciation of vehicles. So in note 6 to the accounts, here in note 6 it says depreciation of vehicles is 20% of cost. So I can see up here at the top of the question, the cost of vehicles are 290,000. So it's just going to be 20% of 290,000, which is 58,000. So my total distribution costs will come to 179,000. So my distribution costs are going to be 179,000. Next, I have to work out my administration costs. So again, I'm going to have to do a note for administration costs. So first of all, I'm going to start off with my administration expenses or costs from the question, which are 203,000. And again, that's coming directly from the trial balance. I also have to, in note 3 to the accounts, so if I go back to note 3, I can see provide for the debenture interest due and investment income due. They'll go on their own later on now down the bottom of the P&L. But there's also auditors' fees of 18,000 and directors' fees of 26,000. Both of those are admin expenses, so they have to go in here also. So auditors' fees of 18,000 and director's fees of 26,000. Now, the next thing isn't in all of these published account questions, but it is here. So we'll have to look at this unfair dismissal claim. Note 7 to the accounts says that a former employee has made a claim of 60,000 for unfair dismissal. The company's legal advisors have advised that the company will probably be liable for the full amount. So because we're going to be probably liable for the full amount, it will be prudent to put these 60,000 into the accounts. So this 60,000 will have to go in admin expenses. So the unfair dismissal claim 60,000 will go in there. And depreciation of buildings is also an admin cost. So if I go back to my notes, buildings is 2% straight line. So to get my depreciation of buildings, it's just going to be 700,000 by 2%. Which is 14,000. And then the last thing I have to do here is the rental income. There was an error with rental income. I can see from note, if I look at my notes, note 4, included in admin expenses is there a receipt of 8250 for rental income. Well, admin expenses have a debit balance. Rental income has a credit balance. So if that 8250 has to be taken out of that account, if the credit balance is taken out, my debit balance is going to go up, because initially when the 8250 was put in as a credit, it would have reduced my debit balance. So if I take out the 8250, my debit balance or my admin expenses are going to go up by 8250. So in total, my admin expenses come to 329,250. Okay, so now my gross profit less my distribution and admin expenses leave me with 100,450. Now my next note is going to be other operating income. So for this note, I have to make a note again. So other operating income. Now the first thing that's going to go in here is my rental income. So my rental income from the trial balance, I can see my rental income is 46,000, but I have to add on the 8250 that was incorrectly included above here in admin expenses. So I've taken it out of admin expenses and I'm going putting it in here, the other operating income. So in total, my rental income comes to 54,250. And I also received a discount. Now again, as we said before, when we're talking about the question ones, with discounts and rent and commission and stuff like that, you need to be careful because they can be either income or expenses. This here is a credit balance, so it's income, it's a discount I received. Whereas if it was a debit balance, it would be a discount that I gave and it would be a selling and distribution expense. But in this question, it's income of 13,000. So that income has to go there, which leaves me with 67,250. So my total operating income is 67,250, which leaves me with an operating profit of 167,700. The next thing I need to do is add on my investment income. I need to do a note on investment income. I can see from the question here that investments, they are 6% investments at 250,000. So 250,000 by 6% leaves me with 15,000 as my investment income for the year. I may as well work out my investment income due now because I'm going to need it for the balance sheet anyway. So I want to see that of that 15,000, did I receive any of that investment income? And you can see here, investment income received of 5,400. So I received 5,400. So I'm still going to be due 9,600, and that's what's going to go in my balance sheet. So to fill that in then, investment income, and again I'm putting in the amount for the year here, not the due bit. The full amount for the year is what goes in the P&L of 15,000. So my operating profit plus my investment income leaves me with 182,700. Then I have to add in my profit on sale of land. So the profit on sale of land I can get from the trial balance. If I go back to my trial balance, I'll see the profit on sale of land of 35,000. That will go in here also. And again, that has to be disclosed on a line of its own in the accounts. So that leaves me with 217,700. The next thing I have to do is take away my interest payable. So I need to do a note on interest payable, which is my debenture interest. So if I go back to the question again, go back to the trial balance and look at my debentures, they are 7% debentures and they are 200,000 of a loan. So it's going to be the interest is going to be 200,000 by 7%, which is 14,000. Now I want to see, was any of that debenture interest paid? Have I paid any of that in the trial balance? So if I go back to the trial balance and look for debenture interest paid, you can see that down here, the last line, 12,200 of that has been paid. So the due bit is just going to be 1,800, which will go in the balance sheet. So the full amount for the year goes in the P&L and the due bit goes in the balance sheet in other creditors. So to fill this in, interest payable is going to be minus 14,000. So my profit before tax will then be 203,700. Now my taxation I am given in the question in note down below here in note 3. It says corporation tax is 56,000. So I'm going to put in that as minus 56,000, which leaves me with profit after tax of 147,700. I need to take away my dividends paid. My dividends paid, I'm just coming directly from the trial balance, 43,000 up here, dividends paid. And again, the dividends paid is going to reduce my profit, so it will be a minus, which leaves me with profit retained for the year of 104,700. My profit and loss balance coming forward, I will get from my trial balance, and again, just if it's usually a credit and which would be profit coming forward of 72, but sometimes it may be a debit balance which would be a loss coming forward. But in this question, it's a profit coming forward of 72,000, which leaves me with profit carried forward at the end of the year of 176,700. So that is the profit and loss account done. The next thing I need to do is the balance sheet. So the first thing I'm going to have in my balance sheet is my intangible fixed assets. So I need to do a note on intangible fixed assets. Here, note 7. So the intangible fixed assets from the trial balance, I can see my patents. If I look back at my trial balance, I'll see my patents are 33,000. Here, my patents are 33,000. Less the patents written off of 11,000, which I wrote off in note 1 above. Here, my cost of sales, I wrote off 11,000, so that has to be taken away here, which leaves me with patents of 22,000. So intangible assets or patents are 22,000. Now I have to do a note on my tangible fixed assets. So my tangible fixed assets are going to be note 8 here. Okay, so buildings. The buildings were revalued at the end of the year. So if I look back to my notes, it says that during the year, land adjacent to the company's premises, which had cost 85, was sold for 120. At the end of the year, the company revalued its land and buildings to 800,000 and wishes to incorporate this value in the accounts. So if they're revalued at the very end of the year to 800,000, then they must be worth 800,000 at the end of the year. When you revalue land and buildings, you take out the depreciation, so the depreciation is going to be 0, which will leave me with a net book value of 800,000 at the end of the year. My vehicles during the my cost of vehicles, I can see from the top of the trial balance were 290,000. Now, to get the accumulated depreciation of vehicles, I need to get to the depreciation at the start of the year, which if I go back to the trial balance, I can see my depreciation of vehicles at the start of the year, accumulated depreciation is 104,000. So that's 104,000. But I also need to add on this year's depreciation of vehicles, which I will get from above here. I've included it in my distribution costs, so it's 58,000. So my total accumulated depreciation is 162,000, and because that's depreciation, it's reducing my cost. I'm going to put that in as a minus, which leaves me with a net book value of 128,000 for vehicles. So to fill this into the accounts, my tangible assets are going to be 200,000 plus the 128,000, which leaves me with 928,000. And my financial assets are just my investments. My investments, I can see from the third line of the trial balance, investments are 250,000. So they go in there, there's no workings needed for that, it's directly from the trial balance. So in total, they come to 1.2 million. And I will actually total those over here on the right hand side. So 1.2 million. Now, the next thing I have to do in my balance sheet are my current assets. So the first thing that will go in here is closing stock, and closing stock is just from note 1 of the question is 76,000. No needed for workings there. The next thing we have to do is a note on debtors. Now these aren't trade debtors, these are debtors altogether. So I need to do a note on debtors, note 9. So my debtors figure from the trial balance I can see is 129,000. So my debtors from the trial balance are 129,000, less my bad debt provision. So I can see provision for bad debts from the trial balance are 15,500. And that will leave me with 113,500. Now I need to add my investment income that is still due, because that is still owed to us, so that's the debtor. So my investment income due, and again I have a note done on this, so my investment income due, and you can see here from note 5, it's 9,600. So that will leave me with total debtors of 123,100. So if I go back to my accounts in debtors, 123,100. And again, bank is coming directly from the trial balance. My bank figure is 90,000. So if I look at my bank, it's 90,000, and it's a debit balance, so it's an asset. If it was a credit balance, it would be a liability. But here it's an asset, so that goes in there. And now I will total these to leave me with 289,100 current assets. I now need to work out my creditors amounts due within 1 year. So the first thing that will go in here are trade creditors. So my trade creditors I can take directly from the trial balance are 94,000. There's no change to those. Other creditors, I need to do a note on other creditors. So other creditors, note 10. The people that I still owe money to, well, the auditor's fees and the director's fees that I had to provide for in the question here in note 3, I think it was. The auditor's fees and director's fees, they have not been paid, so they're still due at the end of the year, so they're liabilities. So they have to go in here as 18,000 and 26,000. The unfair dismissal claim here from the question, note 7, this 60 grand has not been paid yet, so that has to go with other creditors. And so the debenture interest due, which I worked out above here, the debenture interest due, that 1,800 that we still have to pay, that has to go on creditors. So in total, my other creditors come to 105,800. And taxation, again, we need to do a note on taxation because that can't be disclosed on the face of the balance sheet. It has to be in a note. So my taxation, there's two different types of tax. There's the corporation tax, which again was a note to the accounts here. Corporation tax of 56 grand, that hasn't been paid, so that's still a liability. And VAT is coming directly from the trial balance of 21,300. I can see here the VAT is 21,300. So that has to go in there also, which leaves me with total tax and social welfare of 77,300. And my creditors amounts due in 1 year, total 277,100, which leaves me with net current assets of 12,000, and added to my total fixed assets above come to 121,2000. So that is my total assets less current liabilities. Now, to finish off the balance sheet, I've financed by, the first thing I have here are creditors amounts due greater than 1 year, which are just my debentures, which are coming directly from the trial balance. So the third last figure in the trial balance, my debentures are 200,000. Then I have my issued shares, so capital reserves, issued shares. So if I go back to my trial balance, I can see that my share capital was the ordinary shares are 480 and preference shares are 120, which leaves me with 600,000 in total in issued shares. My revaluation reserve, remember we said land and buildings was revalued to 800,000, so I need to do a note on revaluation reserve. So again, the same as we did in the notes for question 1, when we did those questions, I'm going to get my new cost minus my old cost. So they were valued to 800,000. The old cost, which I can get from the trial balance, so I can see here they were valued at 800,000. Previously in the trial balance, the cost of buildings were 700,000. So the difference is gone up by 100,000. And then we have to also add back the depreciation for the year and the accumulated depreciation. So the depreciation for the year on buildings, I'm going to get up here in my admin expenses. I worked those out already in admin expenses. They were 14,000. And I'm also going to have to add back my accumulated depreciation of buildings. Now, where is that coming from? It's coming from the trial balance here of 121,300. So in total, my revaluation reserve comes to 235,300. And the last thing I'm going to have to put in the final figure from my profit and loss account above here, which is 176,700. I'll add up those three figures, which comes to 1012000, and then that added to the 200,000 above leaves me with 1212000, and I can see here from the yellow cells that the balance sheet is now balanced. So that is part A done, the profit and loss account and the balance sheet. Now we're also asked to do 5 notes to the accounts. So we'll have a look down through these notes now. The first note we're asked to do is accounting policy note for tangible fixed assets and stock. So this is just a standard note that you have to do. The only thing that will ever really change here is the year and the percentages. So buildings were revalued at the end of 2015 have been included in the accounts at their revalued amount. Depreciation is calculated in order to write off the value or cost of tangible fixed assets over their estimated useful economic life as follows. So buildings in this question were 2% per annum straight line, delivery vans were 20% cost, and stocks were valued on a first in, first out basis at the lower of cost and net realisable value. And that will never change. The only thing that might change, the year end will obviously change and the percentages may change. Everything else will be the same. The operating profit. It says in the question, the operating profit, and again, these are standard figures that have to go in every time that we do this question. So it says the operating profit is arrived at after charging. Now, these 4 things have to go in. So the first thing that's going to go in here is depreciation of tangible fixed assets. And the depreciation of the tangible fixed assets I can get from my notes because I've worked out the depreciation of buildings and the depreciation of vehicles up here. So vehicles was 58 and buildings was 14. So the total depreciation was 72,000. The next thing I'm going to have to put in is my patents amortised. So the patents amortised was the 11,000 that I wrote off in note 1 earlier. And the director's fees and the auditor's fees are straightforward. They're just coming from note 3 to the accounts. So the director's fees were 26,000 and the auditor's fees were 18,000. So these will always be the same 4 things should always go in here. The next thing I have are my dividends. So my dividends, I've ordinary dividends and preference dividends. Well, I know from the question, I can see from the trial balance that the dividends paid, total dividends paid were 43,000. So dividends were 43,000. Now I can work out my preference dividend because the preference dividend, I can see here, if I look at my preference shares, the preference, there are 8% preference shares and those shares are worth 120,000. So the preference shares will be 120,000 by 8%, which is 9,600. So if the preference shares are 9,600 and the total is 43, the ordinary shares must be the difference between the two of those, which is 33,400. And to work out what the cost per share is, you just get your 33,400 and divide by 480,000 ordinary shares. The same with the preference shares. The value of the preference shares paid out, the preference dividend was 9,600 and divide that by 120,000 preference shares, so it's 8 cents per share. So that is the note on dividends done. Now the next note that we have to do is the tangible fixed assets. So the tangible fixed assets is probably the hardest note that has to be done in the additional notes. We have a note done on tangible fixed assets already when we did our balance sheet. This is just a more detailed note. So at the end of the year, we were told that they were revalued to 800,000. So the value at the end of the year was 800,000. The revaluation surplus, which was the 800 minus the 700, the 100,000, the cost went up by 100,000. So 100,000 will go in here. Now, the cost at the start of, we have to work out the cost at the start of the year. So for the buildings, the cost at the start of the year were in the trial balance was 700,000. Okay, but that includes, it says, if we look at note 5, so if we look at note 5, it says that during the year, land adjacent to the company's premises, which had cost 85, was sold for 120,000. So of that 700 above, there was 85,000 sold of that during the year. So at the start of the year, if it's 700 at the end, and that includes 85,000 of the cost of the land that was sold, at the start of the year, the cost must have been 785,000. Because the disposal, the cost of the land was sold was 85, so the 785 minus the 85 leaves us with the 700, which is in the trial balance. So, and again, just to add those up to make sure that at the end they come to 800,000, which is what it should be, and that is correct. So again, this is just all the cost here in yellow. The cost of vehicles at the start, at the end of the year, was not 290,000, but there's no vehicles bought or sold during the year, so the cost at the start of the year must have been also 290,000, because there's no disposal and no revaluation there. So I'm just going to add all these across. So for my cost of land and buildings, I get 1090,000. And if I want to go back up above quickly and make sure that ties back into my balance sheet figure of 1090. So if I go back and look at my note 8, sorry. So the 800 and the 290 come to 1090,000. So the cost is right. This note should tie back to the tangible fixed asset note in the balance sheet. Accumulated depreciation. So the accumulated depreciation at the start of the year for land and buildings I will get from the trial balance, because the trial balance doesn't take account of any of these notes that we have done during the year for depreciation. So this is the accumulated, even though the balance sheet is at the end of the year, this accumulated depreciation is what it was at the start of the year, because it doesn't take account of additional notes. So the accumulated depreciation of vehicles at the start of the year is 104,000. So vehicles is 104,000 and buildings is 121,300. So 104,000 and 121,300. The depreciation charge for the year. So the depreciation charge for the year, we actually have these above, and we're going to take away the depreciation. Sorry, we're going to add on the depreciation charge for the year. But the depreciation charge for land and buildings, I will get from up here. No, sorry, they're not. I have to put them in separately. So I'll go back to my notes. The depreciation for land and buildings, I will get in my admin expenses note is 14,000. My depreciation charge for the year for vehicles, I will get in my selling and distribution. Comes to 58,000. So in total they come to 72,000, and again I'll add those down. Now the transfer to the revaluation. And sorry, this should be the other way around. The land and buildings is the 121. And the selling and, sorry, the vehicles is 104. I just put those in the wrong way around. Okay, now the transfer to the revaluation. When you revalue land and buildings, you have to take out the depreciation. So if there's 135,000, that 135,000 needs to come out, because at the end of the year there shouldn't be any depreciation on land and buildings because they're revalued. So that should come to 0. So whatever the plus figure is here, you just take it all out. There was no revaluation of vehicles, so that's just going to be 0. At the end of the year, the accumulated depreciation is going to be 162,000. And again, I'm going to total these across. So now my net book value, I have to work, so all in blue is the depreciation worked out. So the yellow is cost, the blue is depreciation. My net book value, at the start of the year, the land and buildings was 785, minus the depreciation at the start of the year is 121. Vehicles was 290. Minus 104 at the start of the year, and the total is 1075 minus 225, so it's 850. Now, and again, sorry, this should be 121,300. Okay, the net book value at the end of the year then is 800,000 minus, and again, sorry, because that I have to take all of that out, so again, that should be 300. I just forgot the 300 euro. Okay, so that's that. Then at the end of the year, the land and buildings, the cost of land and buildings is 800 minus the depreciation of 0. Vehicles 290,000 minus 162, and the total is 1090 minus 162 minus 162 is 928,000. Now it's worth checking, because that note is slightly tricky, it's worth checking that that ties back into your balance sheet figure of 928,000. And it does. Tangible asset note should come to 928,000. So that's note 4. Done. And the last note is the note of contingent liability. Well, the only contingent liability we have is the 60,000 claim made for unfair dismissal. So it's a contingent liability is an amount that is going to be owed. So the company has provided 60,000 for a claim made by an employee for unfair dismissal. The company's legal advisors have advised that the company will probably be liable for the full 60,000 of the claim. So you just have to put in a note there to explain what's going on. That is the 5 notes to the accounts done. And the last part of the question is 2 pieces of theory, which we will look at. So the first part of the theory says, explain why it is important that financial statements are properly regulated. Well, the reason it's important that they're properly regulated are to ensure financial statements are consistent from year to year, that there's no changes in policies and so on, to ensure that the statements can be easily compared with other businesses, to ensure financial statements comply with national and international law, to ensure that the required accounting information is available to external users such as banks and investors. Good regulation makes fraud less likely and builds trust among the investing public. So the shareholders are more likely to purchase shares. And part 2 says, how does the European Union regulate the presentation of accounts? The European Union influences regulation by issuing directives. Directives are instructions that are binding on member states. Member states are given a fixed period of time to implement the directive into national law. The purpose of directives is to harmonise accounting practice in member states. An example would be the 4th directive. And again, if anybody studies business, you will go into this in a lot more detail. That is the published accounts question finished. Thank you.